look who's still standing, ironically, still strong with negative inventory, which is very, very interesting. Hey guys, this is Martin Perdomo, the Elite Strategist, the host of Latinos in Real Estate Investing podcast, where individuals come to learn how to create wealth through real estate investing. And you are going to today learn what is going on in the most recent update for September 2022 real estate housing update. So make sure you stay to the end because I'm going to share my strategies and what I'm doing and how we're moving in this economy and what's here to come. Here we go. The national inventory of active listings increased by 26.9% over last year. That means that inventory has gone up dramatically, guys. So supply gone up, demand goes down. Interest rates is the lever that's impacting all of these things. The sellers are less active than last year as newly listed homes declined by 9.8% on a year-over-year basis. The median list price grew by 13.9% in September, a deceleration from recent highs. That's a little bit tricky there, and I'm going to unpack that a little bit. So despite the improvement in the number of homes actively for sale, as the chart above clearly illustrates, active listings lag pre-pandemic level and growth has stalled over the previous months. Guys, it's the same old song. So the feds are super aggressive right now with interest rates, and it's having a tremendous impact on housing. People can no longer afford those $350,000, $400,000 homes at 7, 8, 9% interest rates. While rates are going up, they're not that bad. So people are still buying houses. You just got to understand what houses people are buying. I'm going to go into that in a little bit here at the very end. So make sure you stick around. And if you haven't signed up for my course, my how to get your first off-market property in 60 days, go check it out. It's in the comments below. Okay, so total listing count up 0.7% year over year since September. The total inventory of homes for sale included homes in pending status, which are those listing in various stages of the selling process. Demand is down, the sellers are gone. Newly listed homes down 9.8% year over year. So we're seeing a decline in newly listed homes. However, we're seeing an increase in inventory in some areas in the market. Active listings grew most by 64.2% year over year in the West Coast. You guys are feeling the pain, 64.2% year over year, followed by the South of 57.5%. increase in inventory, and the Midwest 4.8%, and no region saw new listings activity above previous year. Interestingly enough, the only place that saw a negative inventory was the Northeast. Very interesting. I'm going to give you my thoughts on that in just a moment here. Days on the market was up 7 days more than last September. So that means, guys, that we're starting to see a tick in the average days on the market. This is an indication that it's still very strong. 50 days is not a long time, but I think that by the second quarter of next year, we'll be back to normal levels pre-pandemic, which was 80 days of average days in the market. Interestingly enough, the Northeast is the only region in the country right now that's still in the negative active listing count. Inventory is still low. It's actually shrinking as of September. If you guys remember back in 2021, last year, the migration patterns, and everyone was going down south. We had major migration patterns down to Florida, Boise, Idaho, Midwest. We had people going to the West Coast. We had people going to Arizona, Vegas, all of these states. They grew tremendously. And we had a negative migration. People were leaving the Northeast, right, down to these states. And now the tide is going down. Look who's still standing. Ironically, the Northeast is still standing, still strong with negative inventory, which is very, very interesting, right? So we had all that migration going over there. And now that stuff is hitting the fan. When I think of the region I invest in the Northeast area, Pennsylvania, we're very affordable here, right? Like things are very affordable in this part of the world. We never hit those markets. We never had those hedge funds coming in here and buying all of those single families and renting them out like they were in Vegas and Arizona and all of these large markets. We didn't experience that here in the Northeast as the West Coast did, and Florida and all of those regions, and they're getting hit the hardest right now. I'm projecting like I said, another 10 or 12% by the end of next year in decline. And if the feds don't stop, if the feds don't slow down with this interest rate hike, we're going to see major major pain next year in our country. We're already starting to see assets starting to get devalued. We're starting to see it's starting to reflect here in real estate. We're seeing it in the stock market. For us here, we're playing in the affordable space. We're wanting to stay in those houses that are under 250 and ARV, after repair value. We're making sure that the deals that we're buying, if we're going to flip a property, that they are going to be under that 250 range, because there's always going to be a buyer for that. Also, we're buying properties, the ones that we hold, we make sure that we're in the affordable housing space, because what happens during recessionary periods, people go to rent, and I want to be the guy that, or the company that's providing quality housing, quality rentals at an affordable price, so people have dignity and they can be proud of the place that they live in. All right, guys, thank you for watching. Thank you for listening. You're listening to Latinos in Real Estate Investing podcast, where individuals like you come to learn how to create wealth through real estate investing. Appreciate you guys. Peace out. Love you guys. Thanks for listening. Hey, thank you for watching. If you want to watch more content like this, click right here. And if you want to get some of our merchandise and you want to get a real estate shirt like this, check out some of our other merchandise. Click on the link below. Go check out our merch. Thank you.